Digital is a bright spot amid staggering sales. Digital sales grew 53% in the department store chain fiscal Q2, and online sales accounted for 54% of the retailer's towards own comparable sales. The bad news, Macy Inc. is still losing money. The good news, it's not losing much as expected. And digital sales are helping buffer staggering sales. Macy reported Wednesday in its fiscal Q2 earnings ended August 1st. The department store chain, the number 15 in the Digital Commerce 360 Top 1000 says digital sales remain strong, growing 53% over its fiscal second quarter 2019. Digital sales accounted for 54% of the retailer's total owned comparable sales. Sales in physical stores were down 61%. The company also licensed third party to operate its departments in its store and online and received commissions from these third party based on a percentage of their net sales. Sales were down 34% on an own basis and down 35.1%. Sales were down 34.7% on an own basis and down 35.1% on an own plus license basis, roughly in line with expectations. The department store chain is still losing money and sales remain well below pre-pandemic levels, but CEO Jeff Gennett said demand is picking up across all of its brands. Its adjusted net loss of $251 million in the quarter, beating the $538 million loss anticipated by analysis. Going into the crisis, we had a well-developed digital business and we're seeing that thrive as we attract new customers and welcoming existing customers back to our brands. Jeanette said, our immediate priority is successfully executing holiday 2020. We are focused on laying the groundwork for 2021 and beyond. He said Macy's plans to continue the invest in fashion, digital, and omni-channel. The past 6 months presented challenges as we never imagined, Jeanette said. It forced us to make a significant change in how we run our business. While net revenue fell by 35.9% year over year, the drop was an improvement over the prior quarter, which fell approximately 45%. Taken in isolation, today's results from Macy's would be disastrous. Neil Sunders, an analysis at Global Data Retail, said in a note, however, after a calamitous first quarter, the numbers signal that trade at the iconic department store is starting to come back, even if progress is relatively slow. In February, Macy's announced it would strategically focus on its digital experience, including its e-commerce site, apps, and omnichannel customer base, and improve profitability. This has not changed, Jeanette told investors, according to Seeking Alpha transcript. These remain our priorities, but everything on the digital agenda has been accelerated. Jeanette said customers have migrated online at unprecedented rates. By some estimates, retail has seen 10 years of digital growth in just 3 months. Macy's uses its stores to fulfill online orders such as via buy online pick up in store, ship from store and curbside pickup, which it offers at a few locations. Macy's fulfills about 30% of its digital transactions from stores, the retailer reports. Macy's also announced that it acquired 4 million new customers to Macys.com in Q2. The lion's share of those customers, 3.8 million, were brand new to Macy's brand, meaning they were not previously store or online shoppers. Jeanette told investors that these new shoppers are more diverse and much younger than its current customer base. Its mission with these new shoppers is to retain them and make them omni-channel customers, he said. We're using our personalization prowess in order to see that, Jeanette said. We're looking at lookalikes. We're starting to say them offers. We're getting great bites from it, and we're getting these customers into our bronze loyalty program, which is really strong. For its fiscal second quarter, August 1st, Macy reported net sales of $3.56 billion, a 35.8% decrease compared with $5.55 billion the same year ago period. A net loss of 431 million compared with net income of 86 million a year earlier. For its fiscal first half, Macy's reported a net sales of 6.58 billion, a 40.4% decrease compared with 11.05 billion in the same year ago period. A net loss of 4.01 billion compared with net income of 223 million a year earlier.